Since the Great Recession, the Federal Reserve has held interest rates very close or at 0%. And the whole point was to spur inflation so we can inflate our way out of this dilemma of a perpetually slow economy. Not to say we didn't have a couple of good quarters here and there. It's been a steady, even economy over the last 10, 11 years, with the exception of the last 6 months because of COVID. But it had never really boomed, but it had moved along pretty steadily. And the answer to every problem is the Federal Reserve keeping rates at zero artificially. And they want to spark some inflation because roughly it's agreed upon by economists that 2% is a healthy inflation rate. It keeps prices moving up to keep the economy going, but not too high that we have an inflation spiral. And then all of a sudden people just really can't afford to spend any money. But I don't think it's working. And I think interest rates are too low. And the reason I think it's a problem is because think about the economy in two ways. You have the borrowing economy, you have a generational economy of millennials and younger, and Gen Xers who are still in the borrowing phases of their life, although the Gen Xers are kind of moving out of that now. And then you've got boomers and seniors who are no longer accumulating assets. They're no longer really in the debt phase of their lives. They're more in they want passive income phase of their lives. They want passive income, interest and dividends to pay their bills. They've built their pool of assets, and now they're going to try not to spend that down, but they're going to try to maximize the money that they can collect. What's happening now is, and I don't, this is nothing groundbreaking, but seniors are suffering because they've saved money and they're getting 0.1% or 0.5% from short-term CDs, savings accounts, and money markets. So what's happening is that it's not that they are spending more of their principal, but what it's forcing people to do is spend even less money. Because if you're earning less money on your money, less compounding, less interest, seniors aren't even worried about compounding. They're just worried about getting interest. They're not reinvesting their interest. They're, for the most part, at a phase of life where they're spending it. But what happens is they spend even less money because they're not making any money on their money. So they have to work even harder and spend even less money to preserve their assets.